What happens if the global bond market turns against the US? What if the biggest threat to the US economy isn't inflation, isn't the stock market, and isn't even war? What if it's the global bond market, quiet, boring, ignored, finally pushing back against US international policy? Because if that happens, the damage wouldn't be instant, it would be systemic. And it would change everything. Why bonds actually run the world? Most people think stocks control the economy. They don't. Bonds do. The global bond market is over $130 trillion. And at the center of it all is U.S. government debt treasuries issued by the U.S. Treasury. Foreign governments buy these bonds because they're supposed to be the safest asset on Earth. But that safety is based on one thing: trust. And trust can disappear. How financial retaliation could start. Instead of military retaliation, countries can respond financially. Not by dumping U.S. bonds overnight, but by quietly buying fewer treasuries, demanding higher interest rates, shifting reserves into gold or other currencies. This is slow retaliation. And it's far more dangerous, because the U.S. depends on constant demand for its debt just to function. What happens if that demand breaks? Here's the chain reaction. First, interest rates spike. If buyers disappear, the U.S. has to pay more to borrow. That means higher mortgage rates, more expensive car loans, crushing credit card debt. Next, the dollar weakens. If confidence in U.S. debt falls, global demand for dollars falls too. Imports cost more. Inflation rises. Your money buys less, even if your income stays the same. The Fed's no-win scenario. Now the Federal Reserve steps in. But they're trapped. Raise rates gives economy slows or crashes. Print money gives inflation explodes. There's no painless option. Outrow, this is why bonds, not stocks, hold real power. And why, if the global bond market ever turns against the US, the consequences wouldn't just be economic. They'd be historic.